I don't think Canadian miners have any specific advantage over like miners from the US.
The attributes that Bitcoin has that allows for such a fundamental upgrade in that.
Everything is in Bitcoin.
We're just to the stage of, they'd be like, what are you talking about? You're crazy.
I'm the real Al's Lacrosse.
And I think it's going to happen faster because of the network effects on Bitcoin.
We're about to go live. What is up, everyone? We are live with part of our panel for tonight. Tonight is bull market narratives. We have, of course, me. I'm here to keep the drinks flowing and the conversation rolling. My co-host, Brandon, over there in the Nashville office with David Bailey. Brandon, why don't you introduce yourself? You're muted.
Second.
Yep, you're back.
Can you hear me now?
Yes, sir.
All right. Hey guys, it's Brand BTC. How's it going? Good to see everybody. Oh, we just got someone else jumping in now. Really excited for tonight. I mean, we've been talking about this panel all week. We're excited to really hear some of these bull market narratives that our panelists have for us. And I, for one, can't wait to hear what this guy next to me has to say. Our CEO, David Bailey. Why don't you give a quick intro?
What's up, everybody? I'm David Bailey, holder of Last Resort, biggest Bitcoin nerd you could possibly meet, and believer in ETH and shitcoins. I know that's something that Pierre is really a big fan of, and I'm really honored and excited to get to talk to you about all the great DeFi tokens and altcoins and Quark chain, some great stuff coming down the pike.
David, you're making me blush here. Let's jump to Jack under me. Why don't you introduce yourself, sir?
What's going on? My name is Jack, obviously. Probably most famously known for my work on lightning-related things, but about as bullish as they come. I've been involved in Bitcoin my entire adult life, so it's really all I know. And Bitcoin's trading near 13,000. My whiskey is poured neat. It's a good time to be alive, and I'm super humbled and grateful to be here, man. So I'm excited.
Awesome. Erik, why don't you jump in? Why don't you introduce yourself to the audience?
Hi, everyone. I'm Erik Voorhees. I have been a degenerate Bitcoiner since April 2011. And my sole purpose in life is clogging up the blockchain with transactions. So that's what I try to do. And by so doing, hope to pay a bunch of money to all the miners and make them happy. And we can all just kind of be friends in that way. So glad to be on the show with you guys. And I have a bottle of Everclear right here, but I don't think I'm going to drink that. So I have some Balvenie, and we'll dive in. Nice.
Well, let's jump to Pierre. The beard is looking stronger than ever, Pierre. What's up, man? Welcome.
Thank you. Thanks for having me. Just rocking the quarantine look. I've been interested in Bitcoin since I was a graduate student at UT Austin studying accounting. And my first intuition was to write Bitcoin accounting software because that didn't exist. So that's when I started learning Python and SQL. Just learning as much as I can about Bitcoin since. Worked at different companies, worked at BitPay a long time ago, but also worked at traditional finance companies like Hudson River Trading and Deloitte, and now I'm at Kraken.
Awesome, and perfect timing. Sam just jumped in. Good morning from Hong Kong. What's up, Sam? Why don't you introduce yourself back to the audience?
Yeah, thanks, and sorry I'm a little bit late. My name is Sam. I'm in Hong Kong. I started up Alameda Research, a crypto liquidity provider, and FTX, a crypto derivatives exchange. And recently I've been spearheading Project Serum, which is a decentralized ecosystem built on Solana. I'm happy to be here.
Awesome. So,
hey, can I start with a real quick question? Has everyone on this call spent their entire adult life in Bitcoin?
No, I'm too old for that.
No.
Yes.
All right. reading the ages here, it's like, okay, this might be a group of people that has no real world experience whatsoever, just purely Bitcoin life 24/7. So
sadly, I wasted about 4 years doing regular SaaS. This is what it means to be alive, though.
I spent 3 years on Wall Street trading international ETFs before getting into crypto in 2017.
Got it. Cool.
Man, you made a name for yourself in a few years, man. That's crazy.
It's been a crazy few years.
Let's jump into our... Yeah, so now that we've done introductions, let's jump into our first subject, which is 2020 has been just an absolutely insane year. Does anyone have, like, thoughts to what could be next? Obviously, in the U.S., there's elections coming up. How can this timeline get any more interesting? Let's jump to Pierre.
Yeah, so I think that one of the biggest trends has been enabling more leverage in the system. And so, BlockFi just announced that they raised more money, and that's just one part of this wider ecosystem of leverage that we're seeing emerge. And obviously, it's always existed, right? That's what Bitfinex is, trading enabled, was leveraged Bitcoin trading. And I remember in 2014 hearing people talk about, going 100x on Bitfinex and just yellowing it and whatnot. So I don't think that's new, but I think that the scale at which it's being done, and then also kind of the quality, right? And so now we have CME futures enabling leverage trading, and we're going to have more options. Obviously, we've got LedgerX as well. So I think that the quality and the quantity of the leverage in the Bitcoin system, or on top of the Bitcoin system, right? Let's not get the layers confused here. Is increasing, and I think that's super bullish, obviously, right? That's going to dramatically improve Bitcoin's liquidity. I think that it's just going to make this next bull market even more insane. The more underlying infrastructure there is for bull markets, I think the wider distribution they can get, and the more people we can get involved in Bitcoin.
Well, talking about leverage would make...
You're muted, CK, but
yep.
Let's throw this question over to Sam.
Yeah, I was about to do that.
Sam, what do you think?
Yeah. So, I mean, globally, sort of taking a step back, I think one of the most interesting things to look at is when does the world get unfucked, or does it? And I'm shocked at how long it's gone on. Coronavirus hit, 9 months ago now or something, and the world's still shut down. It's a long time for the world to be shut down. That is way longer than I thought it would be shut down for. I sort of thought after 2 months, people all right, that's enough. We're opening up. That is what it is. I was wrong. The world did not do that. Some places did. Then they shut back down. Then they opened back up. It's been a mess. And that's made 2020 really weird. It's most people don't have businesses aren't open. That's not how the world usually is. And how long is that going to be true for? I sort of thought it was implausible it would last this long. So the fact that I think it's implausible to last beyond the end of 2020, I don't know if that really means that much. My instincts are clearly not lining up here. And is the world just going to be weird forever? Is this the new people talk about being the new normal? I'm terrified. I'm what do you mean the new normal? This sucks. You're saying the world's going to suck forever? But I don't know, maybe, or maybe not.
Do you remember when the U.S. government basically acknowledged their UFO sightings, and it wasn't even a story? That was a few months ago, and just kind of blew over because it's not even news in this year.
It's so weird. There's so many things which and obviously being in Hong Kong, Hong Kong's had some things going on that would be a lot of news in a lot of years. And I think sort of some countries correctly realize that this was not one of those years. And this year, no one has bandwidth for that. That's problem number 28 on the world's, list of problems. So whatever, we'll think about that one later. It's been completely wild as a year. And the wildest thing is it's not even clear it's changing. What's the timeline here? And obviously this feeds into everything. You look at this bull market, what's driving it? I think the Robinhood rally is a really good way to describe it. This isn't being driven by it's a bull market in everything. So it's not like fundamentals because all things suck. Like, but you know, it's sort of like, I mean, bored people trading at home probably is like a lot of what's going on here.
In terms of quarantine ending, I kind of feel like it's like shipping late software. Like, like the number of days late that you ship, it's like exponentially delayed beyond that. That's quarantine.
That's a scary thought.
Yeah, it's really terrifying, but also it's not clear it's wrong, and that's the weirdest thing about it.
Who else has an opinion on? Yeah, Erik, go for it.
It also hasn't exactly shut down the world. Right?
Yeah, right. It's been sort of half shut down.
We're sitting here talking, all day. We're all actually doing most of our business in relatively the same way that we would have been before.
Yeah.
Many places you can still go to restaurants, and most services you can still buy. Amazon still delivers whatever the hell you want, whenever the hell you want it. So there's actually like quite a bit of stuff still occurring. But your point stands that it's preposterous of like how disruptive this year has been. And at the same time, we have equity markets at all-time highs, right? Like the S&P is at all-time highs right now. Something's wrong there. And I think, if I didn't live in the crypto world, I'd probably be fairly worried about being part of that. But I feel a little bit detached and a little bit safer because I'm not too connected with it.
So just want to jump in here. DB and Brandon, when you guys are not talking, can you mute your mic just because there's a lot of sound coming from you guys? And then, I guess, DB, if you want to jump in, or Jack, if you want to jump in to respond to Erik.
I was just going to add that the saddest part is the people worst affected by this shutdown are the people that have the most trust in the system. Like, I've read some articles about people that haven't left their homes since quarantine started in March. They literally are so fearful that they have not left their studio apartment in 6 months, like 5 months. It's like I feel like there's a certain point in time, to Erik's point, where like the world will start just continuing because people have to, and it'll be like so many people eventually just break the rules that the politicians forget to come back to like ever even like getting rid of the requirements put in place. Like, is there just gonna be like 5% of like people that are like deeply trusting in the government that will just like never leave their house forever because they're forgotten about?
You just forgot about it.
Like, oh wait, you're still following that law that we wrote? You weren't supposed to.
10 years from now, we'll still have the mask requirements on the books.
I think to add, this may be a hot take, but Bitcoin is a technology for the paranoid, and the world's really delivered on that. That's a Nick Carter quote. And so as much as it is a shame to watch the world kind of fall apart, but being a little bit of havoc, to Sam's point, I don't think anyone knows what the fuck is going on. And as an entrepreneur and as a trader, that's a fantastic opportunity. So as sad as it is to see the world shaken up a little bit, I think as a Bitcoiner, all of us to some variation have, predicted this to a degree. And it's an opportunity. You don't make your penthouse money when everyone's happy. It's in the midst of chaos that change happens. And so to a certain degree, of course, it's sad. Of course, it's a little bit unsettling. But I'm also at the same time like, let's fucking play ball. We got a halving. Infrastructure's never been better. Access to this asset's never been better. I'm as excited as I am scared. And I don't know if that's a hot take, but I feel comfortable with my decisions over the last decade. There's a lot of justification going on in the year 2020 for me personally.
At the beginning of this year, Marty Bent was saying 2020 year of clarity on his podcast. What do you guys feel about that statement? Is the 2020 the year of clarity or the year of obfuscation?
No, everything that's happened has made me feel less clarity about the world. I don't know.
You could say that more people now have been open to the truth of like all the bullshit than ever before.
That's what it is, CK. It's never been more clear what a scam we're living in. I mean, the stock market being at all-time highs when they
clear to whom?
Down.
Clear to whom?
Say that
it's clear to you before. Is it clear to actually any normal people this year? Or
well, I'm saying that when people look at the eyes and they say, "How does this make sense?" That is their eyes being open to the scam that's going on. And, I think Sam, earlier you said, like, can things become unfucked? And it's like, I feel like the past 20 years has just been a progression of things getting more fucked and never getting like unfucked. And so, like I in some ways, like this definitely accelerates the end state of like the fiat system. And so I think that from that perspective, it's a good thing. But, at the same time, I don't know. I don't see this. I don't see, the longer we go without stepping back from the cliff, I don't see us being able to like pull everything together. It gets harder as time goes on to pull everything together, to pull back from the edge.
Well, let me ask you a question, because I hear a lot of people straddling the rope on, is the world becoming knowledgeable to really the underbelly of this beast? But what on this panel, what would you guys define as success, as what a result of 2020 and the general public? What would you define as success? Because I think a lot of things are rooted in really just a dramatic ambition that is unrealistic. So as maybe Bitcoin, the asset, or your business or whatever, what do you think would be success when we end up curving back to the upside, and whatever that means to you? I'm curious about that, because then I think the conversation is much more clear than whether or not the guy standing in front of me at Chipotle knows what the fuck is going on. It doesn't mean much to me.
I would define success for Bitcoin post 2020 as one in which its reputation changes from, something it's emerged out of, which is this niche thing that's for bad people that want to stay in the shadows, which is very much where its reputation was, 8 years ago, to being seen and perceived as the sane alternative. A true money based on math and transparency and upstanding principles, and that in this world of chaos, this is something we can actually look to as something that's provably true. I think if it starts getting that reputation, that stellar reputation among normal people, that would be a massive success.
I agree 100%. And I think that's already happening personally. It seems to be the narrative for Bitcoin in 2020 is really legitimacy. And you can argue it started maybe with the CME product and such in 2017. But I mean, watching people like Paul Tudor Jones publicly not only hedge himself but then brag about his hedge on fucking Twitter. I mean, that is pretty cool.
That was actually a fake.
Yeah, I think that was fake, but that did go viral.
I mean, regardless, man.
He then did start shilling
Link. I just tried to make, but regardless, I think
what we need from 2020 is credibility from sock puppet accounts. I feel like if we can get the sock puppet accounts behind Bitcoin, we're really destined for great things.
Yeah, I mean, regardless, though, I think that's been the narrative so far. I've never seen such utter confidence. I mean, I've been like a Barstool fan, for example, for my whole life. And outside of the pump and dump videos and whatever, I mean, just watching the general public's opinion on Bitcoin just change. It feels like it's overnight. It feels like the way people approach me personally in my social life, or what I do for a career, or Bitcoin generally, it feels like I blinked. And I think we all know that's the nature of markets generally. They don't really wait for anyone. You're either on board or you're not. They're not very nice. And so I think I agree with you, Erik. I think that's a very realistic and sound goal for success for Bitcoin. And I think it's happening.
So to me, success would be measured by the number of people that are able to exit the legacy system and are able to look at Bitcoin as more than just a speculative asset. And I think that there's nothing that's given me more comfort than having the vast majority of my wealth in an asset that, if the system fails, like, it's not like my own personal ruin goes with it necessarily. And so, I think the more people that we can have around the world that exclusively use Bitcoin as their financial vehicle, as their vehicle for commerce or collaboration, that's really the dream that we need to be building towards. And so, like, are we building the services and products and infrastructures and bridges required so that people can actually use Bitcoin in their life as a replacement of the legacy system.
Yeah,
I would just go ahead, Sam.
I was gonna say I totally agree, and I think products are a huge part of this, and I think there are a lot of products that would be great, and I think a lot of people have started building pieces of it, but not put all of it together. And I think, sort of, as you said, like there sort of is one thing of like, is there a cool product that's useful? And yeah, there's a lot of those. There's another thing of like, is there the product that replaces everything? And the answer is just no. It's clearly no. You know, there's bits and pieces of it, and you see like credit card crypto integration companies, which are clearly an important piece somewhere in this, popping up, and Swipes Office has been doing fantastically, but that's sort of a standalone thing. And you see like, you know, obviously like personal wallets are everywhere, but like, you know, wallet alone doesn't do what you need. You see like payment rails starting to have some work on them integrating wise, but it's not, and you just see like all these pieces of like, what would it take to go crypto native? And it sort of feels like, yeah, we're the things people are doing, and some of them are wacky, but some of them seem like, yeah, it's on the right track. It feels to me like no one's put them together. And I mean, that's, you know, maybe a little bit of like a you know, background for like some of the stuff that I'd be pretty excited if we manage to roll out over the next, you know, year or so, which would be like, yeah, trying to put the pieces that exist together. A lot of them are pretty exciting in a way to sort of build like the complete product that I think people want.
So a new way of life.
Go ahead.
Yeah.
Just a new way of life where you can live a life and be unplugged from the system. You can have exited the system and get all the products and services that you need to be able to continue going about your day.
Exactly. And like right now, there's sort of like, you know, people claim they can do that, and you're like, okay, you want to take a taxi to get somewhere. What'd you do? They're like, oh, I can't take taxis. I don't know how to do that. Or alternately, they're like, oh yeah, no, I just like went to the ATM and took out some cash for it. So like, right, we clearly haven't quite gotten there yet.
To drop a little,
you know,
to drop a little dose of reality here, I don't see any sign that normal people are fleeing to Bitcoin from normal payment or money yet. And I think they inevitably absolutely will. But payment systems normally are working fine for normal people. They're working just as they always have. And stock markets are at all-time highs, and no one's worried about banks. So that is not the environment in which people are rushing into any kind of alternative or will care about learning about it. But I think we all need to realize that when that tide actually turns, when the stock market starts going all over the place and people lose faith in that, when people start losing faith in banks and in fiat currencies and in the payment systems that they're used to, when any small portion of those people try to move into Bitcoin, the volatility in the Bitcoin market is going to become immense. And it's not just going to be the smooth transition where they're like, okay, I turned my $1,000 into some Bitcoin and now I'm integrated into this new alternative economy. They're going to need a lot of hand-holding and guidance and kind care, because they're going to be putting $1,000 into Bitcoin and it'll drop 30% the next day in these volatile markets. And there needs to be someone sitting there trying to help them through that and teach them why it's okay, and to like, don't worry about that too much. That's when Bitcoiners really need to step up and be there to help people.
So, you know, in terms of you know, leading people to realizing why they shouldn't trust the financial system, you know, for myself personally, the thing that brought me to Bitcoin was the 2008 crisis. And the 2008 crisis is what, for the first time, kind of pierced the veil for me and showed, wow, this is a scam. And before that, I was just a, you know, perfect government shill, you know, corporatist pleaser, statist. But that's what brought me to Bitcoin. And then, you know, in terms of people being able to exit the system, I don't think that that's everyday people that are even desiring to exit the system. I want this bubble to be the bubble where Bitcoiners, people who are very advanced users, can exit the system. Like, you know, people on this call, what would it take for you to go the extra mile so that you don't need a bank account? And if we were able to just take our community and get 10,000 people to be able to be completely bankless and high net worth. That is the path that must be tread so that people can follow behind. And so I don't think that everyday people who have $1,000 are going to go all in on Bitcoin, or that's going to be a financial system replacement to them this bubble. But it could be for people on this call. It could be for those that know a lot. And those people will drive forward the products and services required for people to just come behind us. And, you know, there's only a certain percentage, a small percentage, a minority of people that have to go all in on this system for the old system to collapse. Like, what percentage of, communication needed to happen on the internet before people were forced to be on the internet? If you can't make the choice in today's society to be like, I'm not going to be part of the internet. I'm not going to get an email address. I'm not going to get a phone number. I mean, it would be impossible. And so it's like, if we can have 3% or 5% of people that are exclusively able to be collaborated with, to do trade and commerce with via Bitcoin or via whatever crypto system, then you start to get to a great enough percentage that you kind of force people to adopt the system, or they exclude such a significant amount of kind of economic benefit, economic activity.
I don't know if I agree with that.
So hey, wait, let's go to Jack, because I think that strike kind of ties into that. But after Jack, you respond, I do want to transition to our next topic. But great conversation so far.
Well, I agree with Erik personally. I don't think that the evidence is really there that anyone has the necessity to flee anything. Quite honestly, I think the greatest attractor to this asset class is the meme that you buy it, you hold it, and you get rich. And that meme is really not far from the truth. And I think that's attracted most of the market participants, is that putting your money into this asset that's scarce by definition and holds really the most sound properties that a money has ever had. If you hold it and you use that money as a savings technology, it's really benefited and changed lives everywhere. And it's going to usher in the greatest wealth transfer in human history. And I agree that eventually the tide will turn and it'll be the snap of a finger. But I mean, you're really just speculating on when that's going to happen. And I think the phrase, a market can remain irrational far longer than you can remain solvent, I think that applies here. Is, you're just really guessing at when that tide's going to turn. I think that for a hardcore Bitcoiner, the tools are there. If you really, really want to not have a bank account, I'd argue that you can. If you really, really want to. You're asking someone to do a lot, though. You're asking someone to take on volatility risk, custody an asset where their wealth can disappear overnight if they make a mistake. I mean, you're asking someone to take on a lot of responsibility and a lot of potential damage. But really, I mean, it depends on the upside. It depends on your personal situation. But what's the size of that market? I don't think it's big enough for a sustainable business. And so I don't want to be in a position where I'm speculating on when that tide turns. I think that there's plenty of work to do for this asset class before we have to go to central banks and be like, yo, fuck you guys, we're opting out. And for some about Bitcoin is you don't need anyone's permission. For some, if that's your flavor of tea, by all means, you do it. But do I think that, the general public is ready for that? At least where I'm from, no. And I'm very transparent and open about the fact that my viewpoint on the world is, one, very privileged, and two, doesn't share or represent, the global landscape whatsoever. But from where I sit, I don't know. I think there's plenty of work to do before we start telling everyone to jump ship. Personally, I don't see it. I agree with Erik.
Real quick, I want to hear from Pierre. I saw you nodding, and then maybe DB, you can jump in one last time, and then we got to switch topics.
Yeah, I guess I'm never trying to get fewer bank accounts. I'm always trying to get more bank accounts. Like I still see bank accounts as an asset to have. And at a macro level, I think that it's important because if we want to be doing a carry trade, right, of borrowing US dollars for cheap and then selling those dollars for Bitcoin and then taking those Bitcoin and lending them out at a higher interest rate, obviously there's some exchange rate risk there, but the interest rates make sense. And I think that if we want to, at a macro level, be taking down the system, then we got to make sure that the fractional reserve banking system is creating as much fiat as possible and lending it, whether it's against, hard assets like land or Bitcoin or, even your stock portfolio, right? Like people take out margin loans all the time. Take out a margin loan, buy a couple of Bitcoin, and see where it goes, because fundamentally that's what causes fiat systems to collapse, is by speculators and arbitrageurs coming in and doing these carry trades until finally the central bank has to raise interest rates because too much fiat is being created. And I don't think that they will ever raise interest rates. I think that they would rather commit monetary suicide than do that. And so I think that's where that's going. And so from there, I'd argue that no, we should actually, it's bad when I think it's bad when the banking system takes away someone's bank account, right? I don't think the banking system should be doing that. And so like the Bitcoin fixing that doesn't, to me, create a positive argument for closing your bank account. Obviously, bank accounts are bad for privacy, but I still think that they give you tremendous access to this legacy financial system. And so don't go out and close your bank accounts. Perhaps, if it makes sense for you, find ways to borrow from your bank.
That was a very Pierre answer. Thanks for giving a different take on that. Let's quickly jump to, we have a couple of rules here to stimulate drinking, and then from there we can go to topics. But if you say Bitcoin from here on out, you need to take a sip. If you say drink from here on out, you need to take a sip. And if you shill an altcoin from here on out, you need to take a sip. So that doesn't mean you can't talk about altcoins, but let's try not to recommend them here. We are Bitcoiners on on Bitcoin Magazine, and I'll drink to that.
Cheers.
I just want to add that was a great endorsement, Pierre, of the birthday party in Kanye West 2020. I totally agree that if you want to accelerate the end state, print as many dollars as possible today. So the more crises we can manufacture and the more reasons we can give the bankers to keep money printer going burr, the faster that we can get to an alternative system.
And just seconding that, the original question was, how do you think 2020 gets even wilder? I think that we maybe haven't seen anything yet, and that in the next 75 days before this election, we see just all-out chaos, not in a really exciting way, but in like a really horrifying, potentially way. I think, this is American-centric, but I think that we haven't seen anything yet, and that 2020 can get even crazier than we've even saw it so far. So,
sort of to comment on that, like I sort of, my thought is that there's like probably a 90% chance that nothing super crazy happens with the election, and 10% that something does, but I think 10% is massive. I mean I think that, like, on the one hand the odds are pretty low that it happens, but usually the odds are really, really low, and I think this time the odds are only pretty low, and I think that's earth-shattering. And I think that's like one of, I feel like sometimes I feel torn between people saying like the election's rigged, it's going to be a civil war, and other people's like, no, everything's fine. And I sort of feel like both of those are wrong. The election's probably going to be fine, but probably is way fucking weaker than you want for a presidential election. Like, what are the odds that there's a giant controversy over who wins revolving around something like, well, did mail-in ballots actually get cast? Did the government throw them all out? Like, probably not. Probably ends up okay. Probably it's not close enough that matters. But I don't know. I sort of feel at this point that if the election is really close, that if it's within 0.25% in the key swing states, that might be the level where everyone decides that exactly how mail-in ballots were treated mattered, and that then maybe people don't agree on how they're treated, and that, yeah, just like a 10% chance of a shit show is really bad and really massive. Like if your country has a 10% chance of like going to shit every 4 years, that's not good. And that's sort of how I feel about the next few months. Probably it'll be okay, but probably is not where you want to be.
No, on the mail-in ballot side, I think the New York case, they took them, they're like, it's 8 weeks deep into their election and they're still counting ballots, and 20% of the ballots, or 30% in Brooklyn, were deemed like disqualified, unmatching signatures or wrong address or whatever, whether legitimate or illegitimate.
Wrong postage on it.
Yeah,
even.
yeah. So like if you are requiring the entire country to do mail-in ballot, and those ballots are going to be counted at the state or local level where there's poor infrastructure in place, I see it as basically extremely unlikely. Like maybe the primary outcome is that we're not going to be able to determine who is the legitimate winner of the election for some period of time longer than past elections. And if a large enough percentage of the votes are having to be determined whether they are legitimate or not at the local party level or the state party level, you are setting yourself up for a situation where the election is indeterminate, and there's really not a mechanism in place to redo or to unwind that, because either side, rightfully or wrongfully, can claim fraud against the other side.
And one more thing to add to that too, if one side is saying everyone needs to mail in vote and the other side is saying no one should mail in vote and everyone needs to go to the polls, and that side is an immediate, feedback of who won the election, and the other side be an 8-week period before you find out, I think that just spells all kinds of trouble. So that was my prediction there.
Even scarier is if someone's actually elected. That's what I'm more worried about, that either of them will win.
Yeah, I don't know. I mean,
fair enough.
I was worried that
then they're going to take actions.
Right. So I was pretty worried we were going to end up in a position where I was going to be terrified of both major party candidates. Like I was worried. I thought there was a decent chance that was going to happen, and I think it came not that far from happening. I don't know. I sort of feel like, I mean, obviously this is going to depend on a lot of what your beliefs are, and I don't mean to make this as an overall statement. One thing I will say about Biden is, like, whatever you think of him, I personally I don't have that much of a problem with him, but I understand why some people do. Like, I think you look at like who his advisors are and things like that. It's pretty standard. It's pretty, like, I mean, whatever you think of like sort of politics as usual. I do think that you look at sort of who he's surrounding himself with, and it looks like, sort of like getting the band back together from the Obama years, except without Obama, and instead with Biden. And I do think that, like, you look at a lot of the places that Trump's had a lot of impact on the country, and those are like not the sort of ways in which Biden would. The ways in which he's sort of really changed a lot of things about the country in terms of who works for him, what departments under him are like, and also like what sort of like bold new stances he decides we're all taking today.
Totally.
So, is it bad that I want to move away from political talk and jump to Bitcoin? You guys, so one of the things that we were discussing earlier is, like, there was a little bit of back and forth, like, who is ready to opt out, who's ready for a Bitcoin only system. And our first topic is, like, in this next bull run, who are the participants? Like, what are the parties that are involved? In 2017, there's a lot of talk about institutional investors that seems to be potentially coming to fruition now. Paul Tudor Jones, a bunch of other macro people are dabbling in Bitcoin. So, like, who are the key players in this upcoming bull run, and what's important to them? Let's jump to Erik. What are your thoughts here?
Hopefully there are no key players, right? I mean, hopefully it is not. Hopefully the bull run is not attached to any entity or type of group of entities. Hopefully it is just a broad-based mess of individual decisions around which you can't really tell what's going on. I think that would be the strongest base on which you can grow.
Yeah, I agree with Erik, and I think that it's going to be a huge mix, right? And we've seen that so far. I'd argue we're already in the bull market, right? So we can already look at the trends. And from a retail perspective, when March 12th happened and the Bitcoin price went back below 4,000, we saw unprecedented retail interest from existing and new users. So I think that retail is going to continue to be a key player. And then MicroStrategy came out. So corporates were something unexpected at the beginning of 2020, right? Of a major publicly traded corporation putting 250 million into Bitcoin. But that's going to continue. And I think that we're going to see more and more corporates, publicly traded and private, so we might not even hear about it, filling up their balance sheet with Bitcoin. And then third, institutional, and kind of maybe within institutional, the high-end global macro trader, right, that Paul Tudor Jones falls under. And so I think that we'll see certainly more of that. Maybe there would be something unexpected, like a private equity firm being like, hey, look, we've got this amount of capital for 20 years. We're going to put 50% into Bitcoin while we wait for acquisition opportunities, right? So maybe cash reserves will start moving into Bitcoin in unexpected areas within the system. But I do broadly agree with what Erik was saying, that this is going to be everyone participating. And then the last one that we haven't talked about yet is governments. Right now, obviously, as libertarians, we're like, hey, governments should give all that money back to the taxpayers, right? Give them some big tax refunds. Some governments have sovereign wealth funds. So I wouldn't be surprised if we heard from a sovereign wealth fund saying, hey, we just bought 200 million, 500 million, $1 billion. And that to them, it's part of their strategic reserve.
Yeah, I mentioned this on a podcast a couple of weeks ago that certainly any large government isn't going to be that interested in acquiring Bitcoin right now, because to acquire any meaningful position in it would spike the price by a gazillion percent. And by doing so, it validates Bitcoin and hastens their own fiat decline. But a smaller country, an opportunist country, which maybe has a spare, $10 billion, it could acquire Bitcoin over some time without moving the market too much. And in the case where Bitcoin is really taking off over the next decade, could completely catapult the finances of that government out of every mistake that they have made in their own spending habits in the prior couple generations. And I think would really be a profoundly interesting story. And it just takes a few of those countries to do it before the dominoes start falling.
Erik, I just want to echo what you just said. One thing that I've kind of had a bold prediction of is that in the next 100 years, a global superpower will emerge whose power is based on the fact that they got into Bitcoin before everyone else. And like, I see that as like some random small country that just did it. And like all of a sudden is sitting on, 1/21 of the entire world's value. Also, I just wanted to throw out that Venezuela, there's been a few stories about Venezuela seizing its citizens' miners because they didn't properly, register their miners with the government, and no stories about where those miners went after they seized them. So just wanted to throw that one out there as a possible, watch out for that country. But totally agree with what you said.
Yeah, roughly $14 billion would get you around 1/21st of the supply, right? So like for a government, that's nothing. They spend that on a parade.
Peanuts.
Who wants to jump in on this subject? Who is the participants we should be thinking or looking to in the next bull run?
Well, I think I agree with Pierre and Erik, frankly. I mean, originally, Bitcoin's been a retail-driven phenomenon, could never count out retail. And I think institutional capital will grow in interest. We've already seen that. So I don't think that there's, one party that we can hat tip to. Hey, thanks for driving us to all-time highs. I really appreciate it. I think, everyone's going to be included. I think maybe the better question is, what's the narrative going to be? Market moves like this are narrative driven. Markets are backed by humans, and humans are ultimately driven by emotion. And I think the narrative is maybe the more interesting question of if Bitcoin is to run to new highs and ultimately enter another price discovery moment where it is really just looking for, demand to meet supply. Why is that? What's the narrative that's going to drive that? And I think that's the much more interesting question. I think, back in 2017, it was really difficult to make the pitch to anyone managing a large sum of money. The liquidity wasn't there. But I don't think the financial tools were there either. We didn't have options products. I mean, I think like Sam's Exchange, for example, that wasn't around in 2017. And so I think the maturity of the industry has really, I mean, exponentially increased. And so, you get a halving, a supply shock, and a pandemic, some ultimate uncertainty, and price appreciation. And I think Bitcoin is one of the rare assets that has the power to change an individual's life. You can invest in Apple. It's not going to change your life. You can invest in Bitcoin. Bitcoin is going to change your life. You're going to be a different human being after, you've bought your Bitcoin and become a Bitcoiner. And that's a very, very powerful thing. And so I think the more interesting is the narrative, the stock to flow narrative, the fact that Bitcoin is going to ultimately become the most scarce asset on planet Earth, the fact that, deep money managers, those that need sufficient liquidity and sufficient market products, they now have it, and they now can realistically participate without just swimming nakedly long. I think the narrative is maybe the more interesting thing. I think everyone's going to participate in Bitcoin, quite frankly.
Well said.
Scarcest in the galaxy. Scarcest in the galaxy. I just want to point out that correction.
What'd you say?
Scarcest in the galaxy, not just scarcest on Earth. Just
yeah, my bad. Good catch.
One thing that I think I'll say is, I think there are a few things that could trigger this, and I think you get really fucking lucky. Like whoever the next president is, they just like read about Bitcoin one day and get excited and start talking about it. That could just do it, right? And that it probably won't happen, but it could.
It would get great engagement on Twitter.
Yeah, and that's sometimes all you need to jumpstart this. Or like 3 pension fund managers get together and get high one night. It's like, oh yeah, Bitcoin. What if we just got into Bitcoin, And then the next day they just go out and buy like $5 billion of Bitcoin for their like I think sometimes like really random shit can just be the thing that jumpstarts this. But if you ignore that and you say, what's the mainline thing here? I think one underappreciated thing, people keep talking about like when institutions, and everyone thought they were coming in 2017, and then they didn't. And I think everyone sort of like ignored that they didn't, and then tried to there's been a lot of sort of post hoc changes to what narratives people thought they had, try and fit the fact that they didn't come, but definitely are going to come. And I think the sort of missing thing from a lot of this is like, they almost did. They were like a month away from coming. Like January 2018, every large financial institution was meeting once a week to say like, are we going to do crypto? Are we going to do this? And they're taking it seriously. Like their CEO, who had vetoed it like every month for the last 12 months, as some annoying interns like, how about Bitcoin? It's like, oh God, shut the fuck up. You want to do your intern project on it? Fine, do it. I don't want to deal with this. Like all of a sudden, like January 2018, like the C-suite were like, okay, this is, no one's talking about anything else. Like we can't ignore this for another 6 months. Like, are we going to do this? What would it take? And everyone's like, oh God, this is going to be a nightmare. But yes, like they asked their compliance department, the compliance department's like, no. And the marketing's like, no, you gave the wrong answer. Compliance like, no. And marketing's like, I don't know what to tell you. Everyone's asking for it. And finally, compliance comes back and they're like, okay, here's the deal. Like we can make this work, but it's all we're going to be doing for a year. Like, do you really want that badly? And I think this like goes to the C-suite, and the C-suite's like, maybe. Like I like every institution you talk to is legitimately seriously considering making a big play in crypto. And then the bubble burst, and all of a sudden the tide shifted, and compliance was like, you guys still want that? And the BD person was like, whatever, we can just change the subject, and we don't need to like really talk about this that much more. But it came close. And I think like if the sort of the bull run had lasted another 3 months, you would have seen a lot of big names start to get involved, because at some point it just makes financial sense. At some point there's enough money on the table not doing it that do it. And it was retail driven, and it almost got big enough to get all the instos in. And so I think like one piece of this is like, if it gets big enough and there's enough excitement for enough people for long enough, like at some point the institutions will get in. But if things die out before then, it's just going to be sort of another thing like, oh, look at that company that went all in on crypto. Don't they look like idiots now? And so I think like a lot of this is just like, can it sustain the momentum for long enough that it makes financial sense for the big institutions to actually pull the trigger and get in? And I think we got really close to that a few years ago. I think like we've seen the start of that now, but we're not there. Like, I think we're another 6 good consecutive good months for crypto away from the point at which, like, you'll see Goldman open their Bitcoin fund.
There was a lack of custodianship for many of those firms. Like they generally need very clearly defined custodians with X, Y, and Z license and under X, Y, and Z brand that's reputable.
Like, I definitely
and those
agree.
exist now.
They exist. Like, they're terrible. I don't know if people have tried using them. It's not a good experience. But
it doesn't matter what the experience is. They have the right license.
They check the box.
They check the box. Yeah.
Custodians are always the sort of thing where you're Goldman Sachs. If it's worth $100 billion to your business, you'll make it happen. You'll find a way to get the custodians there in short order. But having them there sitting around, it lowers the barrier to entry a little bit.
I can't wait for the first person to tell Goldman Sachs, not your keys, not your coin. That's going to be the ultimate Bitcoin moment.
Right.
I think to Sam's point, like the institutional meme, I think it is a meme because like in reality, like there are like very far and in between participants that maybe fall under the institutional umbrella. It's kind of like a Bitcoin Twitter thing a little bit. I think I agree, like custodianship, retail almost drove this thing into everyone's portfolio, and it was pretty funny and pretty cool. But I think more so like there's a lot of what we would call institutional, like here in Chicago at least, like you got DRW, you got Citadel, you got, I mean, there's like some serious, you got Jump. And so I think a lot of these market participants are very like deeply important to giving a market liquidity, but they don't take necessarily such biased positions. These are market makers. And in 2017, I famously remember there was no trade for them. It was like, you guys should get into Bitcoin. Like, if you accumulate a position and provide liquidity, surely there's plenty of money to be made. And they're like, okay, so you're telling me to open an account at Coinbase Pro and market make there? I mean, the thing is the largest sack of shit that's ever existed. If I'm like Susquehanna, I'm not trading on Coinbase Pro. And it really felt, it just wasn't ready. It really wasn't ready. And as hot of a take as this may be, I'm a little thankful that the correction happened when it did. But I don't feel the same now. I really don't. Like, the fact we've got CME products, I think the exchanges are tenfold better. The options are there. Custody is there. And I think, when you say institution, that's everything between an endowment and an equities market maker. And I think, everyone, it's going to be much more realistic, to Sam's point, when retail drives this thing over the next 6 months to where they have to make these type of decisions. I think it's a much more realistic pitch than, sign up at Coinbase Pro. I mean, I've been on, Coinbase Pro one time and they locked me into an open position, which is like, I mean, that's illegal. You can't, so there are times where it's like, as cute as this thing is, there's quite literally nothing we could do. And I think that that's changed. And so I think it's an important point to make, is that it's not as simple as like, oh, institutions will be here. But, I think Pierre made the point, or very early on in this, is that infrastructure is wildly important. And it's pretty much here now. I mean, there's always work to do, but it may just be good enough this time. Maybe. We'll see.
So, I will add to this in terms of people that we're talking to at our fund that's different than maybe last bubbles. Retail high net worth investors that are relatively conservative look at, to the point earlier that was made about credibility. The industry, the asset has reached to a level of credibility where everyday conservative investors are buying in that they need 1%, 2% diversification in this asset. And like, unlike let's say the last bubble, where people were investing into these ICO or crypto funds, and it was kind of like, yeah, I don't understand how this works, but like, y'all are making lots of money, so here, take some of it. This year, it's much more, hey, I'm excited to join y'all's fund. I'm reading the Bitcoin Standard. I'm educating myself on this topic. I've set myself up a Coinbase account, and so there's a level of buy-in that's different that I haven't experienced before. In terms of the institutional conversation that's going on, I think one dynamic that's going to be unique for this bubble is that in the last bubble, firms that wanted to make the crypto leap or make investments into the space, the sexy thing was still blockchain, not Bitcoin. And so a lot of investment, a lot of corporate energy flew into the, our enterprise permission blockchain. That market's dead. If it's not dead, it's dying. I mean, nothing has come to market. All those investments have been wasted. And so this time, the same actors that wanted to deploy capital, I mean, they deployed over $1 billion in venture money to some of these projects. They're not really going to have anywhere to go but into the actual infrastructure companies or Bitcoin itself or that crypto assets themselves. So I think that that's a unique element. And then lastly, I think the faster that we can get corporate treasuries invested in Bitcoin, which I agree was surprising with MicroStrategy. That guy is known as a bit of a renegade, of course. So I mean, it's not like that's Walmart's treasury going into Bitcoin, but the more corporate treasuries we can get into Bitcoin, the faster that we're going to be able to get a central bank as a buyer of Bitcoin. Because when the crypto winter hits and these treasuries take 80% hits to their value, they're going to be going to the Federal Reserve asking for them to come in and be a buyer of last resort of the Bitcoin market. And so the faster we can get corporate lobbying power and corporate support bought in on Bitcoin has to win, the faster that we can corrupt the system as it has already been corrupted.
Just to add in too, on the micro BT, becoming macro BT, macro strategy. Oh no, not micro BT. That's my company. Anyway, our boy Nick Campmine running our social had a really great moment of like snapshotting his tweet where he was like, Bitcoin is it's gonna blow up. It's a scam, whatever, just like online gambling. So shout out to macro strategy because they actually nailed both of those. Online gambling did blow up just like Bitcoin. Second thing I just wanted to add is, we're focused so much on, from a like societal status, who's next, like who's going to be in the market next. I like to throw out like a geographic aspect, which is, in the last bull run and bear market, one country specifically made it basically illegal to even participate in this market, and that was India. And India's recently had some court rulings to kind of soften some of those restrictions. And in the same way we kind of saw the South Korea market really engage with Bitcoin in 2017 and 2016, I think we could see India really be one of those new markets where, the financial system there maybe isn't as built up as some of these other countries, and they're developing, they're starting to get to a pretty modern country, and like, it's over 1 billion people right there who could be, finding a digital first platform for their financial system. And I think that's a really exciting sphere to kind of look at. Just wanted to add that in there.
Well, Jack, you mentioned earlier, like, what are the narratives that are going to drive this bull market? And my experience has always been that the narratives are a lagging indicator rather than a leading indicator. Like in the first 2013 bubble, it was Cyprus. It's like, it wasn't Cyprus. There probably wasn't even 10 people in Cyprus that bought it, but it didn't matter. It was just like the right talking point for the right moment. And I think like the same for this bubble that we're going into right now, like we'll retroactively pick the narrative, and then when that narrative doesn't pan out, we'll change it later so that we were always right. But if I see anything that's developing right now that has the legs to get much bigger, not that I don't think it's not going to end in disaster, but DeFi, I think there's a lot of interesting discussion and energy around DeFi, and I think there's a lot of elements that make it primed to expand. And I think it's one of those things that, could be very effective at luring people in to the system. And then they don't realize the risks until, it's too late. So I do see that as something that get much bigger.
Really would be wild to see a giant crypto bull run driven by ERC20 tokens that turn out to be vaporware and then crash.
You mean 2017?
Yeah, that's right. It's like there's remarkably strong parallels between between vaporware ICOs and vegetables, DeFi vegetables. It's I don't know. It's fucking amazing how far DeFi is getting on hyperinflation as the use case. I think DeFi is really fucking cool. Obviously, I'm building in it. I think it's huge fucking potential. I also think that it's like, and I think it's created an amazing opportunity for itself and for crypto as a whole and for Bitcoin. I also think it's like really important that it capitalizes on that with great products. And I don't think that's a given. I think that there's like a real worry that will not happen, and that this will end like 2017. And that was sort of like one of the things that made me decide to go kind of all in on Serum is like, okay, this is kind of what I feel is going to like determine whether this just pops and everyone is sad, or whether something kind of great comes out of it. It's like, you get all these customers and money and attention, and like, do you build something great with that, or is it sort of like, is there an emperor has no clothes moment at the end where everyone's like, oh wow, that's what we spent the last few months on? That's sort of embarrassing.
I guarantee you that happens.
Yeah, well, I'm sorry. I hate to be this guy, but you guys are asking for it. I don't even know what DeFi means. First of all, I don't think it carries a clear definition, and so I'll first of all start with that. Secondly, an important thing about 2017 is arguably why ICOs drove Bitcoin up, and ultimately the rest of the market, is because you had to own Bitcoin to really participate. So for most of the products, there was that narrative that entering the market was through Bitcoin, exiting the market was through Bitcoin. And so I don't even know what DeFi is, but if that narrative plays parallel. Thirdly, the fact that our narrative in the midst of another successful halving, CME products, maybe on the brink of an ETF, is that something on Ethereum is going to drive this thing to $1 trillion asset. I don't know how confident I am in that. And then I also don't think comparing a 2020 Bitcoin to 2013 Cyprus crisis, I mean, what it takes to move this, market 1% versus what it took in 2013, I don't think that's near parallel to say, yeah, in hindsight, we could say Cyprus, but at the time, who knows? Maybe someone bought a bunch of heroin on the dark web. Versus now, I mean, to move this thing a 10% move, I mean, that's no joke. I think it's not going to be like a simple accidental, like, I don't know if those are near parallels. So I hate to be that guy. It's totally okay to disagree and have like normal debate, but I wasn't going to sit here and shake my head on that one. I got to disagree on pretty much every single point.
Let it rip, baby.
Sorry, man.
I don't even agree with Jack, and we're both Bitcoiners. But I think I see more value in DeFi than Jack does. And if
really quickly, Pierre, can you explain it to me? Because maybe I do see value in DeFi. I don't even know what it is.
Yeah. So here's how I would try to explain DeFi to a Bitcoiner. You're trying to minimize the regulatory attack surface to. In what I've seen so far, really the most centralized thing is the price oracles, right, coming from outside the system. And so if you can minimize the attack surface to just the price oracle or some kind of set of incentives around it, then you can have financial products that are accessible in a permissionless system, right? And that to me is kind of the promise of it, which is very appealing. We can get into the engineering and what Sam's working on and all of that, but I actually want to tie it back to the narratives, right? To me, like, there's like two, and is that a fair explanation, Jack?
Yeah, I mean, like, we'll go offline because I really do. I mean, I'm not being sarcastic. I really do want to understand it because it's clearly the bee's knees, and I feel like the dummy in the room. But for the life of me, man, I have no idea what the difference is.
So I can take a shot at it as someone who's sort of a DeFi skeptic 6 months ago, and who's now feels like way more excited than I used to, while also thinking vegetables are stupid. And here's sort of how I think about it. First of all, I want to separate DeFi from Ethereum. I think that probably wasn't your point, but I do want to make that explicit that like Ethereum it doesn't scale. I mean, independent of whatever else you think about ICOs and DeFi and things like that, 7 transactions per second is not enough for all of crypto put together. That's like not enough for a single application. So, and I think that's just like, I don't know. I'm sort of like, I'm just fucking done pretending that there's ambiguity about that, or that there's any merit in claiming that's not true. It's just not enough. Like that, it's just like it's orders of magnitude too low. So, okay. But let's put that aside because there are faster chains. And so whatever, you sort of like everyone stands up, walks over 10 feet and sits down at something 10,000 times faster. So why is that cool? And I think what I'd say is like, and I'm going to try and put this in I think maybe this will do nothing, but maybe phrasing that'll mean something to you. Is like Bitcoin's what you believe in, right? That's what you're really excited about. And you know, by the time that you're in the place where like you're like, all right, what I'm going to do is I'm going to hold this Bitcoin in my wallet. That's not like, you don't need DeFi anymore. If you're at that state and that's your steady state, you just want, like, you care about wallet technology and Bitcoin, that's it. But first of all, something had to happen to get you to that state. You had to buy the Bitcoin. And right now, the way that you do all the transactions for Bitcoin is through very non-Bitcoin-like things. And I say this as someone who runs an exchange that, you know, has Bitcoin on it. FTX is very different from Bitcoin. You know, Bitcoin is this giant censorshipless, permissionless, global, decentralized, anonymous network. And a centralized exchange is like a company that makes decisions. And that's very much not Bitcoin. Now, I think it's super important for getting Bitcoin to people. Like, I think, you know, they're really invaluable pieces. But if, and this is an if like you want the sort of Bitcoin ethos to also apply to the things that get Bitcoin to people in the first place, the rails right now are not that to a centralized exchange. And what DeFi can do is potentially replace a lot of that with blockchain. It can replace that exchange with blockchain. And in the same way that Bitcoin itself is decentralized and censorship resistant, and you can't like steal someone's Bitcoin just because you say so. The same thing is true of a well-built decentralized exchange and financial ecosystem. And like, if you want to acquire Bitcoin in the most Bitcoin way possible, you know, it would be through blockchain operations. And you can do that on a DEX, and that's super fucking cool. And in particular, I sort of like am really drawn to the vision of a fully on-chain DEX, not like sort of some layer 2 thing, but like, you know, the matching engine, the orders are all on chain. You have full custody of your funds, except for the 1 second that you're spending with them sending an order. And even then, it's following deterministic on-chain procedures. Like, there's no sort of like black box. It's like, no, I can look at the fucking code there. And that's like, you know, to the extent that you're really excited about Bitcoin as a thing to own, I feel like this is a way more sort of, you know, way more in line with that in terms of at least how to acquire it and how to transact with it. And, you know, you want to, like, you know, any sort of financial transaction that can happen, this is sort of the analogous way to do it. And I think that's super powerful and super cool. And I think that if you do it really well and you try really hard, you can make it work. And current DeFi doesn't do that. Current DeFi is a fucking pain in the ass to use. I mean, you use Uniswap, and it's amazing what they've accomplished given their constraints. But that's because their constraints are amazing. Their constraints are really, really constraining. And they managed to build a thing where you can trade, given that, but it's expensive and slow, and you can't really provide liquidity and stuff. But you can do it right if you get the speed and the right technology. And I think that's sort of the core of my pitch for DeFi is you take that same ethos and you apply it to as much of the financial ecosystem as you can. You just get it on chain, and ignore all the hyperinflation and yield and stuff like that. That's not what's going to appeal to you. That's sort of like, just think of that as marketing. Think of that as like, you know, what the sort of the marketing guys came up with to get users to start using the system, but not what the system ultimately is going to be.
Yeah. Okay. I appreciate that. And my response, and you know, CK, you interrupt me and drag this to wherever you want to go if we're lagging on this topic. But I think my skepticism is rooted in not the ambition. I think the pitch is great, and you know, in theory, if you're able to accomplish that, I think, you know, you're going to generate a lot of wealth for yourself and do good for the world. It sounds fantastic. I think my skepticism is rooted in the fact that I've been an engineer in this space for close to 8 years, And I think that the trade-offs in whatever we want to call it, blockchain, cryptocurrency, are pretty well defined. So the idea that you can create a decentralized on-chain DEX, intuitively, just being so familiar with the technology, it doesn't make a ton of sense. And I had a popular back and forth with Vitalik on Twitter recently, where my problem isn't his ambition. My problem is the marketing, to your point, Sam. My problem is I don't think any of the engineering has been proven to be fact. I think that people are risking a lot of money by participating, but are being encouraged to do so. To hear someone say that this is going to be the narrative that drives retail into this, that's really fucking scary, because I don't think it's safe. I don't think it's secure. And I think people are being potentially misled, and I think people are going to get burned. And so, when you say like a decentralized network that's able to provide all these values, well, what's decentralized? Because I know Ethereum is marketed to be the DeFi leader, and maybe that's my misinterpretation of reading on the internet. Maybe I'm looking in the wrong places, but Pierre and I and others have come to find out Ethereum can't even tell me the supply. No one's running an Ethereum node. So then by definition, to me, that's not decentralized whatsoever. So what's your definition of decentralized? What's your definition? I mean, I think, I just think there's a lot. And so to your point, and I'm not accusing you of it, there's plenty of skepticism. It's a big if, and you've placed your bet and there's plenty of upside. And I think the R&R on your bet is probably logically sound. I just wish that, the disclaimers were more accurate. I wish that it wasn't the narrative to drive the next bull market. Like, you gotta be fucking kidding me. If a bunch of retail's getting in because DeFi, it just feels disingenuous to a point where, you start to feel a little guilty. And it almost takes away from a lot of the good sound work that's going on in this space. So that's my problem. I have no problem with the ambition and with the principal idea. It just, as an engineer, it just screams skepticism and borderline just disingenuous, almost malicious marketing.
I totally hear you. And to be explicit, like, I'm not trying to defend like a lot of the current facts of how it works. I'm not a fan of a lot of the marketing techniques that are going on right now. And I also think that technologically it's really underdelivered. And I think I totally agree with you on that. Like, there's sort of this vision, and we haven't gotten there. Like, we're not, like, the products are not close to that. You use them and you're like, no, this is not there. That's not what, and I think it's just unambiguously not there. And I think the vision is great, and I think it just hasn't been delivered, and unambiguously hasn't been delivered. The place where I think I would diverge, the only place I would diverge from what you said, I think, is on how possible it is. I would like explicitly split out how possible it is for whether it's been at all realized. And the reason is, like, to your point about a fully on-chain, more order book and matching engine, it is possible. And I don't know if you want, like, I think screen sharing is disabled right now, but if someone wants to enable it, I can send an order on one right now. Like, we have it up and running, and you can do it. You can't use Ethereum. Ethereum cannot support that, but use a faster chain, and you can do it. And there are a lot of trade-offs here, but some of these actually aren't so much trade-offs. Some of these are, okay, 3 years later, we've learned a lot. Ethereum has taught us a ton and moved the space forward so far. And the ability to tokenize something is amazing, and we owe such a debt to it. But also, it's sort of like, you need to keep innovating, and I think that, like, some of this is like, no, we can get a lot faster now without sacrificing too much, just by, like, knowing what we know now and optimizing for what we have available now. And weirdly, no one's not knowing, but many people aren't doing it. But that doesn't mean you can't. In fact, you can. And yeah, the vision of a fully on-chain DEX with an order book, and it's doable, and we made one.
So,
sure, yeah. I mean,
Jack, I don't mean to cut you off. I actually want to let David and Erik both jump in because they both look very interested. So let's go with Erik and then go to David. But yeah, this has gone in an interesting direction.
So, yeah, great conversation. I don't mean to sound like old man Bitcoin here, but there was a time back in Bitcoin's history, not so long ago, where we accepted that this was experimental technology, that people shouldn't put their life savings into it, that there were good projects and scammy projects, and you need to do your own due diligence, and you need to be careful, and you need to take some personal goddamn responsibility if you're going to step into these waters. And Bitcoin was not treated as this God on a hill, which is imperfect, and everything else that tries to build anything innovative is just like beneath you. Ethereum is 5 years old. DeFi is 2 years old. let these things exist and thrive and experiment and break and reimagine themselves, because that is what Bitcoin did when it started. That's how you build a new financial system. And what Bitcoin has done for money, DeFi and some of these other protocols are trying to do this for other parts of the financial system. The financial system of the planet is not just sound money. So if Bitcoin has captured that market, great. It's done a fantastic job of that. But it is not the entire financial system. And I think that a lot of these projects deserve credit for their experimentation and for the fact that without permission and without licenses, they are stepping out and trying things that will undoubtedly fail more often than they succeed. But thank God someone's doing it.
David.
Yeah, and Jack, what I would say is my point earlier is that these are narratives. I'm not saying that this is like these things are baked and ready to go. ICOs were the narrative that drove the last bubble. ICOs were a shit show. I don't think there are any ICOs that have delivered, really. But the
Ethereum.
idea of, maybe Ethereum. But the idea of being able to crowdsource a project and raise money from people around the world and have permissionless fundraising is in and of itself a cool idea. No matter how many scams boom and bust along the way, doesn't delegitimize the power of the idea. And so I think, DeFi is just the beginning of permissionless financial services across the board. And, I think that there's going to be a lot of train wrecks. I think, none of this stuff is ready. I mean, even Sam, the stuff that you say is dramatically improved over Ethereum is nowhere close. And, to Erik's point a second ago about sound money, I mean, sound money at the end of the day sits at the core of the entire, any permissionless financial services that we build. Bitcoin is permissionless value, and value is at the core of all of those products. And so, no matter what we build, I think Bitcoin is the de facto value store of the entire crypto system. And Ethereum or any of these other chains are just a proxy for people to be able to leverage their Bitcoin into other financial services, permissionless financial services. So yeah, but I narratives, the thing about narratives is that they're just narratives. And the thing about Bitcoin is like, the meme that's like, this is why we don't deserve nice things. It's like Bitcoin is the definition of that meme. It's like any idea that has like a sprinkle of like a sprinkle of interesting to it will be taken by people in this space to the absolute maximum until it becomes a straight scam. And I'm not saying that that's a good thing. It's a bad thing. But it's just, that's the nature of Bitcoin. And when I got into Bitcoin, the same stuff was going on. I mean, what was the old site called Global Stock Exchange, GBLSE? Is that it?
GLBSE.
Yeah. But, I mean, so what is old is new again in Bitcoin. But I mean, I don't see this pattern of, scams and bullshit and fluffy marketing going away when you have a technology that 99% of people don't know what the fuck it is and are very susceptible to bullshit. And so I'm not endorsing bullshit. I'm just saying we got to be prepared for bullshit to be a thing. Doesn't validate the core ideas around it.
Yeah, all right. My response to that is going to be, firstly, a disclaimer. I don't think ETH should not exist, Erik. I think you're right. That sense of ambition and willingness to try is what pushes the human race forward. Better yet, this industry. And so I'm not of the opinion that it should die. And I also, disclaimer. Many people probably listening know my family background. My grandfather was chairman of the Chicago Board of Trade. My dad was one of the bigger futures brokerage traders and founders in Chicago. I come from trading. I come from, if the Mallers family can make money in a market, we're going to make it. And so, my stepmom famously sat next to Vitalik before ETH launched, and we were part of the pre-sale. And, are people on Twitter going to be upset with my family because we owned ETH at one point and made a ton of money on it? Maybe. I don't care. I would make a market on toenails if it was liquid enough and make money on it.
Oh, yeah.
We're traders. It is what it is. So, one, I have no problem with people making money. Markets are efficient. Markets are binary. For every winner, there's a loser. And if there's, stupid money that's going to be out there, smart money is going to go take it from them. And that's fine. My problem is just, from a software standpoint, Bitcoin has made certain design decisions on purpose. When it comes to engineering, it is the way it is for a reason. If you have goals like decentralization, the ability to self-audit and maintain a copy of this ledger known as the blockchain without trust, it has made certain decisions, Bitcoin Core has, in order to maintain those properties. And it is extremely dangerous to market a lot of these technologies that have not proven whatsoever that they've found a computer science technological breakthrough, which by definition, if they were to succeed, they would have to. And so as a human being that was raised on principles, on being a good guy, I just have an issue with that being the narrative. Now, if that becomes the narrative and I can make money on it, I will. I promise you that. But as being a good guy, I cannot sit here and market it and let retail get in it under false presumptions. I think that it's wrong. And so that's my only thing, is to see a lot of this marketing going on. It just grinds my gears a little bit, because there's a lot of sound engineering and computer science going on that's really great. And it sucks to kind of see people take advantage of that and maliciously market and be disingenuous. And just as a good guy, I have a problem with it. I don't think ETH should die. I think people should experiment with whatever they want to. I don't think Bitcoin should be the bully in the room. I just wish the disclaimers were more honest, because it is going to take a similar computer science breakthrough to what Satoshi came up with to pull off what is now an array of claims. I mean, you're going to have the equivalent of 100 Bitcoin white papers to pull off a fraction of what's promised. And as an engineer, I haven't seen any proof of it, and I'm very, very skeptical. And that's my only point. And as a trader, I'll trade and make money on ETH all fucking day. Of course,
isn't the promise though of second layer technologies on top of Bitcoin is to bring this functionality that we're talking about to Bitcoin? I mean, isn't that the whole point of Blockstream, of Liquid Network? Isn't that the whole point of RGB? So these technologies are not fundamentally separate from Bitcoin. I mean, it's just that they're not there yet, because building on Bitcoin is harder, because it requires you to do it right and not make, black magic. So
I would argue, though, really quickly, that I think the disclaimers have been extraordinarily fair. I mean, the Lightning Network has limits in place that only allow you to do so much on the protocol, because we all know where it is. We all know its age. And to hear Vitalik get on a podcast and say a fast sync light node serves the same functionality as a full node, that's just a misleading lie. And whether he's doing it on purpose or whether he's just uneducated, either way, it serves the same reality that sucks, man. Bottom line, I'm not even going to rant about this one, but that type of shit is going to piss people off. It's going to piss Bitcoin Core contributors off. And that's bullshit. And so that's my greater point. I don't think Lightning, to a degree too, I'd like to quickly say a lot of this you can't control. If media and narratives are going to run away from you, there's only so much you can do. And, in my tweet storm, I said there's a lot I respect about Vitalik, and there's a lot I feel bad for. I mean, it's really outside of his hands, and he is responsible when things go great, and he's responsible when things go terrible. And that's an unfair position to be in. But generally speaking, I think a lot of these altcoin communities can do a much better job at being honest about their projects and making it about the computer science feats that they have to accomplish, rather than ushering in retail, when I think it's, undebatably irresponsible. That's my problem.
No one seemed to have a problem with Vitalik in 2011 espousing that Bitcoin would be the future of money. His marketing back then seemed to be okay.
Well,
even though that was a very young and an untested system.
To be fair,
that was okay. Somehow, because it's a different chain, people seem to treat him differently.
I'm still waiting for my quantum ASIC.
Okay, all right. That's enough toxicity. That's enough tribalism. I think that Andreas Antonopoulos framed it best, which is that Ethereum does not need to care about its supply like Bitcoin does, right? Because it's a fundamentally different value proposition. So like Paul Tudor Jones in his note, he's talking about, I need an inflation hedge. I need a scarce asset. I'm going to just buy a boatload of Bitcoin, and that's going to be the product I need. someone who needs to create a decentralized financial system, they're going to have to go in a different direction. And I think that fundamentally, you don't need the same level of decentralization for DeFi that you need for scarce money. Like the amount of pressure from inflationists has no equal, right? And so that's where you want to have maximum decentralization. And that's why I think that, the Bitcoin ethos is extremely appropriate to the question of money. But the moment we start talking about airline miles or gift cards or like these other conceptions of value, like we don't care about inflation in those systems, right? Like you're not supposed to hold those things as inflation hedges or as a long-term investment. And so that's where we can make trade-offs. And to Jack's, where I agree with Jack, is that the marketing on the Ethereum side specifically, I want to call them out because I think this is specific to them, has gotten completely out of control in the direction of ETH is a scarce asset, ETH is money, we should be using ETH as collateral. I think that that's incorrect. They should be using ETH as gas, as fuel in the system, and they should be using wrapped Bitcoin as the collateral in the system because fundamentally that's the more liquid asset, and so it just makes more sense. And I'd argue the same thing about kind of the decentralized exchanges, right? Like part of where I disagreed with Sam was that I still think that fiat crypto pairs are always going to be the most liquid on centralized exchanges because fundamentally where the user is coming from is from the fiat world, where they do have a bank account and they're going to connect it with an exchange and they're going to send their dollars or euros or yen or whatever other else currency to the centralized exchange, and then they'll go into Bitcoin, they'll go into Ethereum, and then they can go to Uniswap and they can go buy any token in the world, right? That's when they've accessed the free market at that point. But so I would actually just draw some divergence there. But to go back to Sam's point of DeFi enabling, fiat crypto pairs, I think that gets into the stablecoin discussion and then the collateralized lending conversation, where I actually do think that the way that DeFi has evolutionarily adapted is realizing that it can enable this carry trade that I was talking about in the centralized context of, borrowing from fractional reserve banks to buy a scarcer asset, to buy Bitcoin. Here's the crazy part. ETH is more scarce than US dollars, right? So like, even if we have uncertainty about ETH account balances and all of this reconciliation stuff, that's fine. It's still scarcer than US dollars. And so the carry trade still makes sense of borrowing US dollars to buy ETH. And so I think that we're going to continue to see DeFi enable more leverage in the system. And the more Bitcoin gets wrapped and put onto Ethereum, like the Ethereum maximalists or the Ethereum influencers, they'll say, "Oh, isn't that embarrassing for Bitcoiners?" Right? They're like, "Oh, we're taking their assets." Like, no, like this is what your platform is advertised to be able to do. If it could not wrap Bitcoin, then you have not only like failed to deliver what Bitcoin delivered, but you've also failed to deliver what you wanted to. So I think that all of these systems are symbiotic and are working well together, but there has to be clarity that the scarcest asset in the world is Bitcoin. And that's going to continue to be the case. And I haven't seen any evidence that that's going to change within the foreseeable future.
A few things to say on that, like, and to echo some pieces of that, like, the sort of like, the risk profile that you're exposed to for something you're holding for 20 years is very different than something you're transacting with for 13 seconds. And on one, it's sort of like, oh God, like any ability to ever steal a significant fraction of what's currently in use is fatal, because that's a significant fraction of everything. Whereas to the extent that you only care about that it only impacts people currently transacting in a system, the risk is like a million times less. So that's like one key difference here. Another thing I want to say though is that, like, you're sort of right that fiat is going to be where a lot of this comes from, and you can't have a fully decentralized fiat on ramp. Like, banks are not on the blockchain. Somehow you have to get from bank to a blockchain, and however that happens is there's centralization there. There's no way around that. And to be clear, I think sometimes a fully centralized approach is the right one. I think for a lot of users, it's just like you try and give them a DEX and it's like, just fucking like give me some retail app where I can click buy and it's connected to my credit card. And then like the number goes up in my account. And that's what they want. And but I also think that you can imagine a system where you sort of minimize the amount of centralization, where you have this one thing and maybe it's a stable coin or something like that. You have this one point of centralization of the on-ramp, but then once you're there, the entire rest of the process is decentralized. Both the transactions are decentralized, but also the custody is. And there's sort of like, it's always your own keys. And I think that like, for a lot of users, that's a real value proposition. Going from like the entire, most of the system is centralized except for the asset that you're holding in a centralized wallet, to the entire whole thing is decentralized except for this one step where you go from a bank account to a block, to a stable coin. And so I do think that there's value in that transition too.
So I just want to take a second to shill something and to disagree with something I keep hearing again and again, which is that you have to have a bank account to interact with Bitcoin. And I do understand that Bitcoin is a Western technology primarily right now in first world nations, and most people have bank accounts in first world nations, but there are over 2 billion people, maybe 3 billion people that don't have a bank account. And it's impossible for them to ever buy Bitcoin by connecting their bank account to an exchange. And so, hopefully the primary way that people gain Bitcoin in time is going to be by providing the one thing that all people have, which is their capacity to do things, burn their real energy to gain income that could be paid to them in Bitcoin or some other crypto asset. And that's how they enter the system. So I want to push back on that. And the product I want to shill is Carrot, a product by BTC Inc., where people can go and fill out surveys and do shit that's valuable and get paid sats. So anyway, I just wanted to take that moment to plug that product, earncarrot.com.
I do think that there's some truth in like, right now, the fiat on-ramps are fucking crucial to the system. Just how everyone's going in. But you can imagine once half the world has done that, then you don't need necessarily to do the fiat layer. And then you can just like get paid for your work directly in Bitcoin. And it just has their app. And it's like, here's my QR code. Please scan this to pay me. And it goes to my personal wallet. And so, yeah, I think there's a distinction between what is necessary right now to on-ramp a lot of people to crypto versus what is sort of the best method in a hypothetical world where a significant fraction of people have already done that step.
Yeah.
So CK, we've got a couple other topics to hit on this show. And then we have a whole other section, which is the mempool, where you guys are going to bring some topics to us. But holy cow.
We're definitely skipping the rest of the topics and just jumping straight to the mempool. So hit a few of you guys asking, just saying, come prepared with a subject you want to talk about regarding bull market narratives. Does anyone have a subject that they're really itching to talk about?
So I think there's one question that I'm surprised by what I've heard people saying so far that I think needs to frame this entire conversation, which is, in this bull market, what do you think we peak out at in market capitalization or price of Bitcoin? And I think that kind of helps anchor where people's heads are in terms of what's coming.
It's also the most fun question.
So should everyone going to make a quick bull run prediction? Let's start with Erik.
80% confidence we peak between 1 and 200K.
Would you be willing to trade on that?
Already have.
All right. Well, if you've got more size there offline, I would sell you a shit ton there.
Well, I won't be buying at 150K. I'll tell you that much.
Oh yeah. No, I mean, I'd sell at 80 or something. I'll give you some edge to your. Anyway, we can take that offline. But
what's your guess?
I guess, yeah. So I would say median case is 14,000, but I think that there's significant, more than 10% chance.
14,000.
You peak at 14,000.
Before there's
14,000.
Get out of here! Get out of here!
Yeah, before there's a mini crash. I mean, not necessarily all-time high looking forward, but like before sort of having.
We're talking about bull market, like peak of the bull market.
Well, let's define what an exit of the bull market is first. Like, is it 20%? Like
75% drawdown.
Yeah.
Oh, 75%? I don't think 75% is right. Like, I think if there's a 50% crash in Bitcoin, everyone decides a bull market. Like, that's the end of that bull market, right?
No. That happened like multiple times in 2017.
Yeah, but Bitcoin's a lot less volatile now. I think if Bitcoin's at 7K, people aren't going to be like, oh, great, bull market's still here. Or if Bitcoin's at not 7K here, like Bitcoin's at 5.5K, that's a bear market.
So March 12th was a bear market?
So Sam, then rephrasing the question, what do you think Bitcoin hits before its first 75% drawdown?
Oh, geez. I mean, I don't even think it's like 100% there's ever going to be a 75% drawdown or like any time in the near term. But I mean,
are you new here, Sam?
No, I just have wide probability distributions.
Wall Street, so maybe that's tainted his mind a little bit.
Maybe. I mean, like I don't know. What do I think it'll hit before the next 75% drawdown? Geez, I don't know, 20K. But that's my median. But I have just gigantic error bars on this, and I think in particular you could see it running up to a lot more than that, based on like a series of like one gigantic buyer and $5 billion of sell side liquidations put together that could just create like this gigantic liquidity crunch sell side. And so I think like I don't want to say that like I feel confident that's the number. I think it could be an order of magnitude off from that. But like, I would be maybe the way I would phrase this, and this might just be answering a different question, but like what do I think the highest price it'll hit in 2020 is? And or maybe even through the first half of 2021. And for that, I would say, I don't know, like 15K would be my median guess, but with a non-trivial chance of something of like 50K.
Okay, I would put the odds that either 50% odds we peak at like 100K within, let's say, the next 3 years, right? Or 50% odds this train does not stop and we destroy the fiat system. And so we don't have a terminal price for you. I really do think that this is the bull market that is, well, obviously every bull market that comes is going to be more likely to break the system than the previous one. But I think that the plumbing is in place and the backdrop is in place that this market could actually break the fiat system. And so I'm putting the odds at 50-50 there because I like to not go all in on that. But the other 50 is 100K.
I don't think this bubble will break the fiat system. I think it'll be the next one.
It's the next bubble. It's the next bubble.
I'll be happily surprised if you're right. I think it's the next one.
All right, Jack.
I'm a big fan of Plan B, man. I know that may also be. I'm just full of hot takes today. I'm sorry, but I love the stock to flow ratio. I think Bitcoin stock to flow ratio, the last halving and its correlation to reaching market cap equality to silver, I thought was fascinating. So I don't know about percent chance, but off the top of my head, I wouldn't be shocked to see Bitcoin trade at 250K for a given month. As a blow off, and we would be in the range of gold, and the stock to flow right now is similarly in the range. So yeah, I'm very confident that Bitcoin will be $1 trillion asset in the next 18 months or so, and that's around 50K Bitcoin. That I'm much more comfortably speculating on. The 250K I think is just a fun podcast answer, but we'll see.
Yeah, I'll jump in with my answer. We've been talking in the office about like some price target of, if you want to equate like 20K with 350K, where you may see it on some exchanges, but you won't kind of see it everywhere. I think 350K is kind of that not quite reached top. But I will also throw out that another thing we've talked about is you still have a capital gains tax market mover in Bitcoin, where especially Americans have to sell off in December to make sure that they can pay off all their capital gains tax. So I think you'll always see like a December peak followed by the bear market kind of emerging kind of in the next year. So I would say that peak will be 2021 December. Will kind of be like where it tops out. So wherever we're at that point is my bet is the top.
Why wouldn't you want to sell in January? If you're trying to minimize taxes, you would want to defer them for a year, and so you wouldn't sell until the next year.
Or you would borrow against your Bitcoin so you don't have to sell at all.
There you go.
So, I'm going to say, I like Erik's take 80% of 250K. And then I'd say the other 20% is that we go to 400 to 500K, which I think is like the extreme. I think we get there for like a week. So, I mean, I'm not saying that it's going to be a significant amount of time. What drives these bubbles, in my opinion, is the halving event. Halving event creates a supply demand, disequilibrium that then some narrative forms around, and the amount of actual liquidity that the system has in it drives these just extreme price movements. I do think, Pierre, your question about, when does Bitcoin break the system is a topic not discussed enough. And I just want to point out that, like, if Bitcoin does break the fiat system and the financial products and services that people need to live their lives are not built on top of Bitcoin rails, we are screwing over the world. Like, it is not going to be a good situation for us. So,
no, I disagree. I really don't think so. I think that the existing,
people can't
here's the thing. You can use Bitcoin on Visa. You can use Bitcoin on ACH. You can use Bitcoin in a wire transfer. Like, all of these systems, you'd be amazed how quickly it would be like it would be like the preparation for Y2K, right? Like, okay, we got to rewrite some banking software, but here we go. Like, this is happening, and I just don't think that it would be that disruptive. I think that the economy would do great because it would have this huge burden taken off of it, of this massive siphoning of wealth from productive individuals to the totalitarian states.
So Pierre, long-term, you're absolutely right about that, but short-term, you're completely wrong. It would be like the most disruptive, chaotic, horrible mess that society has ever gone through. And if we're not careful, Bitcoiners will be blamed for the mess when all we're trying to do is offer the way out of the mess. And I think that's something that we need to be really careful about when it starts happening. It's not going to be a peaceful, friendly time.
So, I do think what you bring up here is like, it's an inevitability. And if you're putting a 250K market cap, I think what does that equate to a $20 trillion market cap or $10 trillion market cap? Is that what it is? 250K. I think that's 10 trillion.
Yeah, it's over by gold in the trillions. Yeah.
Yeah. So I think gold's 10 trillion or 9 trillion. So, the .com bubble was 20 trillion. And the bubbles can only get so big before the bubble causes a crisis in the legacy system. And so, when the .com, when the savings and loan crisis came, when the .com crisis came, when the subprime mortgage crisis came, the ramifications for people's standard of living was so dramatic that the Federal Reserve felt compelled to step in to try to bail the system out. And so, when we go to a $10 trillion, $15 trillion market cap on this next bubble, and then we have a 75% drawdown, that's going to be more vicious than the .com bubble. And so I can't wait to see, whoever it is who's in office at that time, or Fed chairman at the time, have to step in and be the buyer of last resort, because otherwise, Walmart's treasury is going to be wiped out from all of their reckless Bitcoin investments. So, I do think that it's a thing that's not it could be within the next 10 years, and we are nowhere close to being able to support even 5% of commerce in the world happening on top of Bitcoin. We can't do that right now. Not even 1%. So we have so much that has to be built now. And that's why I think I started this off by saying, like, it's Bitcoiners' responsibilities that we have to go fully native, so that we create the demand and force the product innovation, so that in the future, when we do destroy the system by accident or on purpose, however you want to frame it, there is a treaded path for others to follow. There is a system in place that can be built upon, that can, we can build back from the ashes.
Yeah, I don't know. I'm fine using Bitcoin at JP Morgan Chase. I know that's like controversial, but I just don't have any problem with it. So I don't think that like there's some extreme urgency to where we do need to do what you're describing.
We should be careful with the narrative that Bitcoin is what destroys the fiat system. The fiat system is destroying itself, and it will destroy itself. And if Bitcoin is seen as like, oh, thank God that alternative has been built since this system destroyed itself, that is a far better narrative than a bunch of crazy anarchists built this thing to take down the government. That will be a situation we don't want to find ourselves in.
Sure. No, I totally agree with that. That's why we have to make it crash as quickly as possible, so that they don't have the time to take out their vengeance upon us. But yeah, I point well taken.
Alternative is that the people in charge are also participating in the upside of Bitcoin, so that they won't blame Bitcoin because
they're in on it.
Yeah, they're fine.
Yeah, but fuck those guys.
That will be the single thing that it makes it most likely that Bitcoin will not be vilified to death when things start changing, is that those people that have positions of authority have already for some time become part of Bitcoin, own some and are using it, and they may not be public about it, but once they have it on their own book, there will be much less antagonism toward it. And I think that's something that we should all hope happens in time.
Let's hope they're hitting those Cash App weekly limits on
Exactly.
Anyone else have a topic they want to talk about?
I have one that I think I'm on maybe the less popular side. I think an ETF would be awesome for this industry. Talking Bitcoin specifically, but of course, an ETF for any asset that you are behind in the crypto space, I think is just a great financial instrument. So I'm kind of curious. This is a pretty diverse panel. I'm curious everyone else's opinion on that, because I know could be seen as controversial in this space.
I think it'd be fantastic, and it's inevitable, but it's probably going to take several years. And I actually think once Coinbase IPOs, that's going to be seen as a proxy ETF long before the actual ETF happens.
Well, MicroStrategy is a proxy ETF now. So I think that we're going to get more proxy ETFs, but I do think that it would be valuable to have a real ETF, right? So that it is a pure play and you don't have to worry about management and whatnot. So I think that it's really it speaks to the SEC, right? Like the SEC should have approved an ETF already, and the fact that one has not been approved already makes me concerned that the decision is not so much on the fundamentals as it is on the politics of it. And I don't think our financial markets and that our investors should be, dealt politics rather than good public policy. And so I think that needs to change. And I don't really have a problem with the centralization of an ETF. I don't even think it would be that good or that popular of a product, to be honest. I think that there is already GBTC. So I think that would just accrue more value and continue to take in more coins. And so like that centralization argument doesn't even make sense, because let's look back to what happened in 2017, right? Like Barry Silbert was behind the New York Agreement, behind SegWit2x, and that didn't happen. And yet he had a bunch of coin with GBTC, right? So maybe he could have tried to move the market in one direction or another. It didn't happen because it's a well-regulated product. And I don't think that the fears around it are well-founded. The problem is that you don't have the seizure resistance as you do with your own private keys, right? But I think everyone's aware of that, or I hope so. And that people are trying to make a reasoned decision about, I don't trust myself to hold my own keys. I've heard people say that, right? And that's a perfectly legitimate perspective to have. And they should have access to a good product of this ETF. Or they have money locked up in some kind of retirement account. Oh, my light just went out. That would make that very convenient to have an ETF.
Many of the owners and buyers of the ETF would be the institutions that can't hold their own keys. They are, by their bylaws, required to use some kind of instrument like that.
Yeah, and it's like you look at the GBTC premium, like that is institutional or qualified investors being subsidized by retail investors, right? And to me, like the SEC is failing retail investors by making them pay the premium on GBTC instead of having a real ETF product.
The reason the SEC has go ahead.
Just it's a gift. I mean, it's $5 billion that's now in GBTC, rotating every 6 months, 20% return on Bitcoin every 6 months. I mean, it's a great handout that only lasts as long as there's no legit retail ETF product.
The reason the SEC hasn't approved an ETF, I think Occam's razor answer is simply career risk for those politicians. For them to approve a Bitcoin ETF is to take a huge risk of endorsing this crazy new thing that is explicitly anti-status quo and anti-banking system. And if it all falls apart and the SEC has approved it, they lose their jobs and their reputations are destroyed. If they don't approve it, a bunch of Bitcoiners get pissed, but they don't care about us, and they certainly don't care about retail investors. So
I mean, they
I don't
have
see that
approved
changing.
it to the extent that it's being held by publicly traded companies. Like I don't understand the distinction between the SEC saying, "Hey, look," and the first one I think was Fortress back in 2013, that actually in its public filings had Bitcoin on its balance sheet. And if the SEC thought that that was a problem, like that was when they should have addressed it in public companies holding Bitcoin. And now there
they
are
don't
multiple.
have that authority. They don't have the authority to declare what a company can hold on its balance sheet.
They have the ultimate authority on accounting, right? And so if they want to say, hey, look, that's not even a real asset. You can't even hold that on you can't put that in your financial disclosures as being a real asset. You have to put it down as an expense, right? They could have taken that position.
Yeah, but then they're making an affirmative position, right? Which is always more risky for your career than just sitting back and not letting anything rock the boat.
That's
right?
totally fair. Yeah, and that's the same with GBTC, right? Like they don't have to make an affirmative decision with GBTC because of its structure. But ultimately, from a public policy perspective, like GBTC exists, it is huge, right? If it were to get wiped out and those $8 billion or how many $1 billion like disappeared, I don't see why people would not blame the SEC, right? They would be like, why didn't you stop GBTC from existing and taking that affirmative approach? So I don't know. I could see that, you know, the momentum is against an ETF, but they just need to do it.
I mean, my guess is GBTC will be the ETF. I mean, I think that's their goal. So, you know, I think that the ETF is great in terms of providing a vehicle that a lot of people can have access to, that a lot of infrastructure is already built out to, and allowing them to easily be able to get their Bitcoin exposure. Where I think the risk comes in is, Pierre, your scenario, your hyper Bitcoinization scenario, where you have a government that's dealing with a financial crisis. We already have a track record of them, in a financial crisis, taking away assets from people as required, gold. And so between Coinbase and an ETF and Gemini and the US-based Bitcoin services, there's a pretty large amount of Bitcoin sitting in the United States and sitting in US jurisdiction. And, you may have a mining network that, gives $100 billion of security to your chain, but it doesn't protect you from a Black Hawk helicopter coming down, people rappelling down from ropes at Coinbase.
Hold on. You said it's in the United States. I doubt it is. I bet you those keys are split up in multiple jurisdictions, right? And that establishes one of the principal advantages that Bitcoin has over gold, right? Gold has to have physical locality, physical presence. Bitcoin, you can split it up 20 different ways. You can have it on every continent. You can have it in Antarctica. So then you've got to pull together some international tribunal. You've got to get all of these lawyers together. Like I think that it's far more seizure resistant than what you're describing.
I mean, it definitely is more seizure resistant than gold, but You just have to arrest the principals, and you just have to go, Brian, you're going to jail for the rest of your life unless you do what we're telling you. I mean, if you're complying with SEC regulation to begin with, you're already under that regime. So, I mean, I don't see Barry Silbert, saying cut off my fingers and no, it's just like he lives in the United States. He is captured in the U.S. fiefdom. And so, it is more difficult, but people don't want to go to jail. I mean, Erik, what would you do if the police came and said, shutting down Shapeshift and you need to hand over the Bitcoin or you're going to jail for the rest of your life and your team is going to jail?
We can't. It's non-custodial, which is the whole point. So,
okay. Sure. Okay. We have custodial. We're talking about custodial services. So, when Coinbase goes not custodial.
If it was custodial, yeah. No, I mean, people need to assume that anything that is custodial can suffer from the $5 wrench attack or the government coming in and fucking with your entire life attack.
I see it more likely that it would be actual criminals that do what you're describing than it be the actual government. Like,
what's the difference?
Right. Yeah. Fair. But I just think that it's far more likely that they're going to kidnap, your family or whatever and ransom them that way than for it to be the United States federal government has seized the assets of GBTC.
That's true until there's a financial crisis in which Bitcoin is actually taking off and the dollar is falling apart. Then you're going to see some serious antagonism. And you're going to see things that are very similar to the 1933 gold confiscation order.
It's going to get toxic for sure.
And if you look at people from 1930, like what their moral standards were at that time versus today, dude, moral standards have not gone up since 1930. They've gone down. So if they're willing to take your gold in 1930, dude, they're willing to do way worse things today. I mean, it's like not even in the same category.
Yeah. And people back then were more intelligent about money than they are today also, right? So the fact that the American public basically sat down and permitted confiscation of money, of gold from them, does not bode well for how the populace would treat it today. I think it'd be even easier for it to be done today. But thankfully, we can hide it.
Jack, to your question, I think a non-custodial ETF would be fire. So, when we could get the SEC to give a thumbs up on that, that would be really cool.
I don't think the SEC would permit anything like that.
Yeah.
No, they wouldn't. They wouldn't.
But you're right. It would be dope.
Sam, you've been really quiet. You probably know more about this than anybody else.
Yeah, I mean, it's we've been fortunate. We've not had to deal with this so far, basically. And I think like the only sort of similar cases we've had to deal with are, I mean, things where there's a lot of weird cases that come up that just like miss the narrative. It like some guy, like basically like a customer's an idiot and trusts someone, but it's clear that someone stole from them, but also like they did trust that person with the funds. And then like we get thrust in the middle of it and sort of like our instincts are like, whatever, it's your account, do what you will with it. That's the wrong answer, as it turns out. Like everyone else is involved in it. It's a mess. I think like the biggest example of this, which is sort of not what you guys are talking about, but in practice is what comes up the most, is that as it turns out, like we had a ton of security features on FTX. It's all toggleable on and off. When you do that, everyone toggles everything off. And so everyone was using minimal possible security settings, declining to use 2FA. And also, as it turns out, if you just say, give us a username and password, about a third of people will give you a username and password that are already available on the darknet. They'll just give one that they've used on 30 sites already, one of which got hacked. And their database is now just for sale on various sketchy websites. Someone will buy it and will just try all of them on FTX. They're like, here are 1 million addresses that we know are vaguely crypto related and passwords they've used before. I wonder if any of them signed up for FTX and used the same username and the same password and toggled off every security setting. The answer is yeah, 15% of users. It's a shocking number. Like we sort of saw the number, like, oh my God, like I can't believe that's like a lot of our users. It wasn't like they hit someone. And sort of our instinct going in was like, this is what you chose. Like we provide the platform, we provided these options, you chose it to be the case that the way you get into your account is you have this username and this password. Someone's applied those, thus, yes, they have access to your funds. And that clearly was the wrong answer in retrospect. Like at some point you're like, no, okay, Like that's not the answer if it means you can steal 15% of all accounts. And so I mean, we turned off withdrawals on the site, and we're like, all right, like what the fuck are we gonna do here? But it's really messy because a lot of these people gave like not enough information to even like definitively tell who's a hacker and who's not. And like, and so anyway, that was sort of like the first shit show we faced. And our takeaway from that is, first of all, we spent like hundreds of hours building heuristicy things, which are like, okay, here's like the kind of withdrawal that we think is like 30% to be a hack on someone's account, not on FTX, but like someone just like, you know, sometimes people put their username and password in paste bin. Other people scrape paste bin and find it, you know, and so like, you know, and just say like, you know, email the person like, can you please confirm via email that you want this to be processed? And like a lot of the time they'll be like, no, I don't. So that, but also we now make 2FA mandatory to, the problem is that you can't even say 2FA is mandatory for a withdrawal. That doesn't work. That was our first instinct. You can't do that. Someone deposits. And now what do you do? Like the hacker, if they have access to the account, just goes in, says 2FA and withdraws. So even that, so what we do now is in order to, you can't stop someone from depositing because that's on there. So what we do is in order to generate deposit addresses on FTX, you need to have 2FA enabled. That's like now the rule. And that went like 90% of the way to solving that class of things. But there's just been this huge class of problems we have to deal with of the form like, you know, someone wrote down a list of security procedures for their account and it turned out they didn't make a good choice. But if you sort of ignore those, you know, we fortunately never had to deal with you know, real like fights between governments and users or something like that. But it sucks. I mean, there's sort of like, there's just no good, you know, I could tell you like, here's the policy that solves this problem. And I would be lying. I mean, you just can't, right? Like a government says this person's a terrorist. Like this is literally like a member of like, this is one of the last Al-Qaeda members. And this is where they're storing their treasury. And you can't tell the government like, go fuck yourself, right? But also you can't be like, oh, that's great. Someone who has some bureaucratic post in some nation somewhere said that they'd prefer that they had this money than the user. Great, it's all yours. Like obviously like that can't be, it's you can't take any of the extremes and you're sort of left with this shitty situation. And, you know, I think in practice, this just hasn't mattered much so far with a, you know, for most exchanges. But you know, the big worries here are things that haven't happened yet. The big worries are some massive, powerful, generally respected government does something that's a massive invasion of citizens' wealth, but isn't totally unjustified. It's like sort of there's a justification, but it's kind of flimsy. Like that's the thing you worry about, and you haven't seen that happening with crypto really yet. But I mean, if it does, it's going to be messy and it's going to suck.
You know, the only way to convince people to have good security is for them to get scammed. I mean, I don't know how many of y'all have been scammed. I was scammed on my very first Bitcoin purchase by Bruce Wagster. Bruce, my Bitcoin wallet guy. Bruce Wagner, yeah. And like, you know, Jack, you were saying earlier that you know, DeFi is very dishonest in terms of its marketing claims. It's like the cheapest time to get scammed is on your first investment when you have the least at stake. It's like almost like a beneficial service would be like a place where people could buy their first $50 of Bitcoin and you scam them right away. It's like, oh, $5 and take you the other 45. It's the most valuable lesson that you could give someone because that's what protects them when they have 45 million of Bitcoin.
Like getting hazed. It's like into this fraternity of fucking.
Yeah.
Sounds like.
Yeah. You say something like, scammed yet? Wow. Unbelievable.
Freshman.
Yeah. and you know, we talk about this, but if you ask most people, what was the biggest crypto scam ever? They're not going to say it's when CoinCheck got hacked for $600 million. They're not going to say it's the guy on Telegram who pretends to be a support agent, which by the way, there's thousands of. If you join any exchange's channel, you immediately get deluged with people pretending to be support and asking you for money to fix a problem that doesn't exist. If you ask the average citizen, what was it? I bet what you get is that in early 2018 and late 2017, everyone was saying that Bitcoin only goes up. So I bought some Bitcoin and then its price went down. And that's, I think, you ask people emotionally, like the average person who's touched crypto at some point, like what was the big betrayal of trust? I sort of think that's the answer, which is weird because that's not what anyone means by a scam. It's an asset. Assets prices go up and down. Like if it can't go down, it can't go up. Like, if it's never allowed to go down, you can't let it go. So it's sort of like, it's not like that's Bitcoin's fault, but I do think that's a little bit of fault of the community that, like, in the same way that we talk about DeFi right now and like people getting sort of scammed by things, it's not like they're technologically scamming them. They're just like a vaporware project that's going to crash. Bitcoin wasn't that, but it was really hyped at some point, and hyped in a particular way that wasn't even like long-term promise hype. It was sort of get rich quick hype, and not even like you might get rich quick hype. It was like you will get rich quick hype, and a lot of people did, and then a lot of people didn't, and those people were not happy.
It was the New York Times. Everyone's getting rich except you, and that picture.
Right.
I mean, yeah.
Exactly. And so everyone bought in thinking that's how you get rich, and then said they got slightly poorer, and that was sort of what a lot of people see as like the original crypto scam.
So I've never heard that criticism before, but it's actually a pretty searing indictment of our space when we throw the word scam around like it's hello. And
right.
In some senses, I mean, we're not scamming people, but it's like with every bubble, getting back to the point of marketing, these marketing narratives, it's like we're always selling vaporware because what we can actually do right now is never enough. We're never satisfied with what Bitcoin's actually ready to do. So we're always going to tell you and sell you on the feature that's right around the corner, the reason why it's about to, go to the moon, and it's never quite there, So I don't know.
Yeah.
I've never heard before. It's a good point.
It's hard. I mean, it's tough because you also don't want to say this is useless because you believe in it, but that serves you want to say I believe in it, but also that's not investment advice. But also I'm investing based on that advice. So like it's not like I'm right. It's sort of this weird position to be in, and I don't know what to do. I mean, what I always say is like when someone asks me like FTT or SRM or like some coin that I'm heavily involved in, like will the price go up? I hate when people ask me that because I can't say. I'm certainly not going to say no, but I can't say yes, it definitely and so instead what I say is like, look, I'm not going to talk to you about the price of this thing. What I'm going to say is I'm really excited about the future of the project underlying it. And here's why I think it has huge potential. That's what I think. You can make your own decision about pricing. But it's tough because like everyone's like, okay, fine. You said a lot of words. That wasn't why I asked. I asked if the price is going up.
The people that get pissed off because they wanted the price to go up and it went down,
yeah,
they can't get past that. Those are the people that are not ready for the personal responsibility that is required if you're going to step out of fiat and into Bitcoin. And I don't know how those people change and become that way, but there is going to be a large portion of the population that is not ready emotionally to be able to handle the responsibility that comes with something like this. And okay, we got to let them be them.
Yeah.
We talk about moral hazard all the time in the legacy financial system, and it's like there has to be repercussions for actions. That's how we discourage people from those actions. And it's the same. I mean, people have to be allowed to feel pain in Bitcoin because it channels their behavior in a way that has to be channeled, or they're never going to be able to cut it and make it in this space more than setting up a Coinbase account.
Yeah, I mean, I agree a lot. I know I was making the point about misleading marketing. I think you're spot on, Sam. And there is a point at which it really exceeds anyone's control. Like when the New York Times has enough of an incentive to put Bitcoin on the front page. I mean, there's not a lot anyone can do. But I largely agree. I think there's a lot of people that should be held accountable in a similar way to what the community dubs a scam. Absolutely.
So I was just trying to Google the headline to see exactly when that New York Times headline was in relation to the top of the market. But the conversation also didn't get there. So I'll get it in a second. But before I do, does anyone else have anything else that they, a question, a topic they wanted to pose to the group? We're in kind of this mempool section where we're taking stuff from everyone.
I'm already in overtime. I got to get going.
Yeah.
But this is fun. Thanks,
all right.
guys.
Well, so Yeah, so let's go ahead and go to the last word. And Pierre, you got to run. So let's go with you. Give us your last word, your sign off. Where can people find you?
Yeah, my last word is go buy Bitcoin. And you can find me on Twitter at Pierre_Rochard. And thanks for having me on, guys. Bye. It was just a fun conversation.
Thank you so much, Pierre. Who wants to give last word next? Sam, you're at the beginning of the morning there. Jack, you want to jump in?
Yeah, I gotta bounce. I have a meeting. I'm trying to get strike in Europe and some parts of Asia. I know that's popular demand, so I gotta bounce. I got a meeting about that. But I thought this was an awesome conversation. I also am very cautious about delving into the stereotype that arguments about altcoins and things like DeFi need to be hostile. I respect everyone on this panel and no way think that this conversation was hostile whatsoever. So I enjoyed it thoroughly. Humbled to be part of this crew, quite honestly. Pretty much everyone I look up to. And yeah, I mean, I think it's an exciting time. So what a great time to be alive. Really, really humbling and thankful time to be a human being right now. This is fun. So
Cheers,
on that,
Jack.
I'm gonna peace out. Yeah, nice talking to you guys. Have a good Thursday.
See you, Jack.
Or Friday.
See you, Jack.
Sam. Peace out.
See ya.
Sam, you want to go next?
Yeah, I mean, I don't know, thanks for having me on. This is fun as always, and way more animated and less bloodless than most of the panels I'm on, which I kind of like as a change. So I hope I haven't pissed the hell out of too many of you so far today, but thanks for having me.
Absolutely. And then, that's an incredible perspective that you bring. So really appreciate it, Sam. Where can people find you?
Oh God, Twitter. I mean, I just think about how many products we release now and think about how many we would release if I didn't spend all my time on Twitter, but I do. So SBF_Alameda on Twitter.
Awesome. Thank you, Sam.
Thank
you. Erik?
Yeah, well, Erik Voorhees on Twitter. No one will spell the name right, so it's almost useless to even try. Yeah, I appreciate you guys having me on, and I'm excited to see this thing keep growing. And my advice to everyone still listening is as this bubble heats up, keep your head about you, stay humble, remember what the point of this is, which is to change how money works for the world, and be careful. So that's it. Thanks, guys.
Thank you, Erik. And it's 2 O's and 2 E's. I tweeted at you about this.
And a K on the Erik. It won't happen, but.
David, why don't you close us out?
I just want to say it's an honor to be on this panel with all these awesome Bitcoiners. Every person who's watching this is a Bitcoin OG in the making, and you're treading a path that others will follow. And so the next 18 months, regardless of what Sam said in his price predictions, ignore that. Next 18 months.
He's so wrong.
He's so wrong. He's so wrong. But the next 18 months are going to be wild, and it's going to be easy to lose your head. It's going to be easy to make bad decisions. And, just remember what matters. Prioritize what matters and why you came in the first place. Because when you're filled full of self-doubt, when things get crazy and then things get hot, the reason that you came in the first place is the thing that will guide you. So anyway, awesome to be on here.
100%. And I'm Brand BTC. CK, take us home.
Peace. See you guys later.